Hey there, BiggerPockets community. This is Sterling White here, your favorite real estate investor. All right, welcome to this lovely Sunday, and today I'm going to be discussing the four things to look out for when you are acquiring a property with tenants in place. I hear myself in the background there. So let me go ahead and get all these windows up so I can see the comments that are coming in. And for everyone who is here, what we'll be doing is a few giveaways, which is always my favorite for those of you who do share. So we'll be giving away the book on managing rental properties by Brandon Turner. In addition, other people who do share as well will be giving a 15-minute phone call with myself, and generally it goes over 15 minutes, and we can just discuss all aspects real estate and do whatever I can to essentially bring you value, whether that's acquiring multifamily, acquiring single family, building a brand, negotiating with sellers, etc. So please comment below. Those of you, one, don't forget to share the stream, those of you on Facebook and also YouTube. And then secondly, please comment below. One, let me know that you can hear me, and also let me know where you are from. I am here in Indianapolis, Indiana. So let me go ahead and pull up some so folks can see me going live. Live. Let's see if this works. Awesome. Okay. So there we go. We've got Jeff. Thanks for joining, Jeff Turner out there in Alabama. You were still my favorite before this even. Who? What? Okay. All right. We've got Jeff Turner from Alabama. Thanks, Peter Wade, from joining from California. All right. Raul Rivera. Thanks from the LA. Mira. Oh, go Indy. Yes. Thank you. Hello there, Rachel. Thanks for joining. And just a little bit about myself is, again, I am a blog contributor on BiggerPockets.com, write tons of blogs, delivering value on all aspects, single family, multifamily. I am a buy and hold investor in the Midwest, so markets in Indiana, Kentucky, as well as Ohio, and primary focus is acquiring apartments between about 75 to 150 units. So that's currently what I do now, and have just a little over 300 units, which my partner and I own and manage, and we only manage our own assets. And there was one more thing on that, and we just got awarded a 80 unit complex in Louisville, so that's going great. So now it's the due diligence phase. So we just went under contract, and now we're getting the phase one completed, obtaining even additional leases, ledgers, rent rolls, which we should already have the rent roll, but now we've got that. So it should be a juicy deal. But yeah, all right. So let's jump into the content. Let me give a few shout outs. Hello there, Kyle Colston. What's up? What's up from Buffalo? Hello, Jeremy West from PA. Jared J. Rock from Minnesota. We've got Nancy here. Adam Reed, thanks for letting me know that you can hear me loud and clear. Desmond Thompson, thanks for joining from NY, New York. All right. So let me make sure I got everything. Everything's good. So again, for those of you who share, and I'm unsure if you can actually do that on YouTube. Hopefully there is a way. And also, if you're on Facebook, if you could share. Again, on YouTube, if you can share as well. One person I'll be nominating to win the book on managing, the book on managing rental properties by Brandon Turner. And also, I'll pick someone else to have a phone call with myself. So please share the stream through Facebook's algorithm. It pushes it out to that much more people. And I'm here to ultimately bring value. And those of you who are on here, don't hesitate to ask questions throughout. This is a Q&A session. I'll do my best to answer while I'm going through all of the content. So again, thanks for joining, everyone. And those of you who will be jumping on the stream later, if you happen to have any questions, don't hesitate to comment and then at me, so I'll be able to receive that notification on Facebook. And then on YouTube, if you jump in there, I'll be reading through the content, the comments later. So jump in there too. Awesome. Thanks, Shara, for sharing on YouTube. Thanks for joining there, Daniel. He's got a question right out the gate. Where can I get the contract from to Daniel Spinks, if you could ask that question one more time, where can I get the contract from to put a property under contract? Oh, okay. That is a great question. That's actually one that I can provide to you. Just go ahead and give me your email, but it's just really a standard purchase agreement. You can get those online, or generally you'll have one that's specific to your market. Very general, that just says this is the purchase price. These are the terms of the purchase, whether it's all cash purchase. This is going to be the inspection period, etc. Very general purchase agreement. So jumping into the content, 4 things to look over, 4 things to consider when taking over a property with a tenant. And first, just on a high level, a lot of times that, well, from my experience, is these owner is selling their property to solve a problem, whether that is they're behind on back taxes, that's where they're selling it, they inherited the property, they want nothing to do with it, or even it could just be the tenant in itself. So that's one thing you have to take into consideration. Maybe the tenant damaging the property and just not paying a rent on time. So the first one is to firstly, determine the property condition. So that's the first thing right out the gate, and that's just doing a walkthrough. So either you found the listing that is online, or you're direct with the seller and you're starting negotiations and you haven't been able to see the interior of the property. So you're running the numbers and you're just assuming that it may need this amount of rehab. So it's always good to actually, I would say, required to do a walkthrough on the specific unit. And this is a single family home. Even on apartment complexes, I would say this, the apartments that I've acquired, my partner and I walk through every single individual unit. I know it does get repetitive after a while, but some could be a little bit different and need more repairs. And those are all things you have to take into consideration because those repairs are ultimately going to be coming out of your pocket. So again, walk through the house or the single family home residence, or all the specific units if it's, let's say, 1 unit or 2 units and above. And then again is the condition that has been conveyed to you may be different from what you've ran in your numbers. So let's say the rehab is a little bit over budget, then that means you need to go reevaluate your numbers and then factor that in. And then that's what you would be able to leverage when speaking with the seller, that, hey, I was at 100,000. I was under an assumption that this property only needed 20K. It needs 30K. Hey, I'm going to need some type of concession. Or if you offer, hey, I'm going to need a reduction of $10,000 because I did not foresee this. Or you can give them the second option is, I will pay the 100,000, but hey, you've got to fix this, this, and this. So that's a little bit of negotiations that you can leverage as well. So that's the first one, property condition. And again, those of you who are on here that are on Facebook, please also do the loves and the wows. Love those wows. Do the wows. It gets me jazzed up. So please do those. It's awesome when I see that. And again, Facebook just pushes it out to much more people. So the second one is going to be the numbers, which I should actually put this I should have put this last, but always when you're taking over a property, from my experience, I just run it on a worst case scenario and run the numbers conservatively, because generally these only work out 30% of the time. And what I mean by working out 30% of the time is my partner and I purchased the property and the tenant actually was not up to par on payments, and then it just doesn't work out. So now we're going to have to go in there, do the renovations, and also we may have to go through the eviction process, which just extends everything out. So if you're in a market like Chicago, that would not be so good, because from my understanding, those eviction processes can be a pain. So again, that is always just be sure to run your numbers conservatively. And then again, okay, that's it on that one. Just run the numbers. And then the third one is to take a look at the tenant's track record, specifically the payment history. So if the owner has a software that they're utilizing, you can just simply ask for a ledger, and that'll detail the payment is, what is it, 1,000 the first of every month, and then that, hey, this is the general day that they're paying. So you'll be able to see a track record of this is a history of when that person's been paying. So obtain the ledger as part of the due diligence. And then the second is if it's a mom and pop, unfortunately, those people may not be working with the software. So another way is to see if you're able to get bank statements that showcase, hey, these are the days or the 6th or 7th of each and every month. That's when you can see in the bank statement that they've deposited $1,000. So that's one thing to look. Dealing with mom and pops, it's always iffy. And on my end, I just run worst case scenario because there's always, generally there's some funky stuff that's going on with that. And then if the mom and pop owner is not able to supply him that information, then that's when you just got to run it, get it cheap enough to offset your risk that you have going into that. So that's one thing. And then the fourth one, so again, I'll just go over everything. For the 4 things to consider when taking over a property with the tenant in place. First one is to determine the property condition, because oftentimes if this is online listing, that it'll be prettied up by the realtor to make it seem in a lot better condition than what it actually is. Or if you're speaking face to face with the seller, oftentimes you don't know what the interior looks like. So ensure that you do a walkthrough of that specific, if it's a single family home residence or if it's a 330 unit apartment complex, ensure that you walk through every individual unit or have someone else who walks through it and details that this and this is going to need repair. So the second is the just running the numbers, and that comes to just about acquiring any specific type of deal. But on this is to be sure to, well, just from my experiences, run conservatively. Even on apartments, when we're taking over those, the occupancy may be at 95%. However, once we take over, it may be a little bit of a drop just due to we try and work out with the tenants, but oftentimes it just doesn't work out because we're implementing professional systems and they're just known for, they can pay a month and a half late, but we don't accept that, so we have to evict them and get them out. So that's where the occupancy drops, and generally it just doesn't work out. So just be conservative on your numbers and run in the worst case scenario if all possible. And then 3 is track record. You want to obtain that history. So if it's a seller that's a little more sophisticated or they have a type of software, just reach out and say, hey, I would like to, if you can give me a copy of the tenant's ledger. And on the ledger, it'll just provide all the details on this is the rent amount, and then this is when they pay. And you'll be able to see that history too. So if they pay the end of each and every month, then that could be a troublesome tenant, knowing that they're just kicking the can down, and that once renewal comes, you can just send them a 30-day vacate, and then you get another tenant in there that actually pays consistently and on time. And then if it's a mom and pop owner, then in that case, you may want to obtain bank statements to detail, okay, well, this is when they're depositing the rent amount each and every month. So again, those are the 3 initial points. And for those of you again on Facebook, please like and share the stream. I'm going to give a couple shout outs. Thanks John Jones for joining. We've got Jeff Turner, thanks for joining. All right, DJ, thanks for joining. Nancy, again, I may be giving you another shout out. James Wax, thank you for joining too. How have your current syndication investments been going? I'd say majority of them have not been seasoned just yet. So a lot of those is we're going in, we're implementing a value add component. So with that, it tends to be a little bit slower in terms of getting to our projections that we have provided to our partners. But overall, we've been able to get the occupancy up in terms of a lot of these did have, occupancy wasn't so great. So we've been able to get better quality tenants in there and push up the occupancy and push up the NOI. So that's good news on that. And let me get to the fourth point. And the fourth point is just the standard due diligence. And what I mean by that is obtaining the lease is very crucial. And again, this is for a single family home residence. This is for duplex, fourplex, 356 apartment complexes. You want to obtain the lease just to ensure and look through each and every individual lease. I know that can get repetitive, but with that, you just want to make sure that there is nothing that some type of, funky concession that was made to where it's your last 2 or 3 months of rent are free. I'm telling you, you'll see some crazy things in this industry, and some property managers will offer that. And then, that's the same thing. And then once the renewal comes in, another thing is when you have the leases, all of those rights do transfer over to you. I would say that's in Indianapolis. I'm unsure if that is in any other states. You would have to check on that. So if you're across the board on all your rental properties, rent is late on, let's say, the 5th of every month, and then after that there is a $200 late fee. However, if that currently says that rent is late on the 7th day of the month and anything after that is $25, then you still have to abide by that. However, once that lease expires, you can get that resident on you can renew that tenant or just get them signed on your lease. So that's one thing you have to take into consideration, is that tenant's rights is once you purchase, look at that lease, because all that's going to transfer to you. So one thing to keep in mind. And again, I know that's here in Indianapolis, so you'll have to check your state on that. So now I'm just going to open up the questions to everyone. I know I just breeze through the content, but I would say there's one question here that says, do the new owners reserve the right to raise the rent immediately upon obtaining the property, or does that time frame vary from state to state? So that's a great question there, Jeff. And that's one thing that I just mentioned, is looking at the lease is, let's say it's under rented by, it's $950 for the rent and the fair market is $1,200. As an owner, and this could vary upon state. I know in Indianapolis, you're just not able to go in there and jack up the rent to market. Is that once the renewal happens, that's when you can, or once the lease expires, that's when you can go in there and then increase the rent. And majority of the time, you would have to put in specific renovations to justify that increased rent. So if it's at $950 now, fair market is $1,100. The current condition does not necessarily translate to you being able to just go in there and just bump it up to $1,100. You may have to upgrade the flooring, the countertops, put in stainless steel appliances. So that's one thing you have to consider. One thing you could do is incrementally increase the rent on the resident once the lease does expire. And that's one thing that you can have that conversation with them and says, hey, with the previous owner, they was, under renting this specific home, specific property, but the fair market is this. However, what I can do for you is I'll just increase it by $25 or $50, etc. That will just vary upon your market. So that's one thing, and that was a great question on that, Jeff. What percentage down payment should we put down for single family and multifamily homes or multifamily property? That really just varies on that. Generally what I do, my partner and I do, is just 25% down, and we'll get a 75% loan from the bank. But we're generally dealing on purchases of $3 million plus. So what should a new property management company expect starting out? Geneva Foster, thanks for joining, and If you could please elaborate on that question. That could go in so many directions, and I'll see what I could do to help that. No, thank you, Jeff. I'm glad I was able to bring value on that. Another question is, what if I am out of state and not able to walk through the unit? Well, you better get someone to walk through that unit in that case and shoot some footage. And specifically, it's good if you're out of state to have someone who has the boots on the ground, whether that is a property management company or just a property manager. Ensure that they get through there, take plenty pictures, take videos. That way they can send it over to you so you'll have a better understanding of the general condition of the unit, the unit. And again, going back to one of my earlier points is if it's online property, just do not take what you see on the picture. If it's listed on the MLS by a realtor, for instance, that do not take the pictures with a grain of salt. And then in addition to that is if you're dealing face to face with an owner in terms of the negotiations, that the condition that, and let's say you're out of state and then you're speaking with an in-state owner, or maybe they're out of state too. But with that is just whatever they say the condition is, you can have that in your underwriting, but still you want to do that walkthrough just to confirm. Because I've spoken with some sellers where they say, the property just needs some light rehab, and I go in there and it needs just about everything and it needs to be gutted. Not needs to be gutted, it hasn't been that bad, but there's been times where they just under-exaggerate what needs to be done. I think under-exaggerate, if you could use that in that context. So again, please everyone who is on this live stream, is the people who do share, and also on Facebook too, is I will be giving away a book that is written by Brandon Turner, who's on BiggerPockets, on managing rental properties. And that's one thing I did not ask BiggerPockets for, so we're just going to do it anyway because I just want to bring you guys the most value. And then two is I will be having a 15-minute call. I'll be picking someone else to have a 15-minute call with myself, and we'll just discuss anything, all aspects, real estate, whether that is single-family home acquisition, multifamily, building a property management company. Don't know so much about land, so we would not be able to cover that. But I could figure it out. I could figure it out. So let me go back to the questions. Do you recommend managing it yourself if you live in the quadplex, or would you still get a property manager? It depends on I would say when I first started, this was starting in the industry 18, 19 years old, so just a little under a decade ago. And through that process, when I purchased my first single family home residence, first single family home as an investment, I did self-manage and I still self-manage. But if you're, what is this question again? Do you recommend managing it yourself if you live in the quadplex, or would you still? I would say personally, it depends on, I don't have the full context, Ryan Foster, who asked this question, but it depends on if you plan on self-managing, then how much time are you able to allocate to it? I would just recommend getting someone in there who does have experience and just paying them a fee. And then once you reach scale, that's when you can do some additional self-managing yourself. Because now looking back, I learned a lot through self-management, but I would say at scale, that's when I would start to do the self-managing myself. At a smaller scale, I would just outsource it. So that's just me personally. But it would, if you enjoy managing and you will be able to devote the time, then you could do the managing yourself. If what I'm reading correctly, if you just plan on living in one of the units of that quadplex. But I wouldn't mention to the residents, hey, I am an actual owner. That's always just me. I always just like to create that barrier that there's another third party that's making the decisions. So that's just my personal preference. How do you leverage from properties you already own? How do you leverage from properties you already own? That would just be Lorenzo through a refinance, if that's what you're getting towards. I'm unsure if you could elaborate on that. How easily do the security deposits that the tenants have to the previous owner transfer over to you? All those deposits. From my experience, all of those have transferred over unless there's some type of negotiation that the seller decides to. I have not rented to that specifically. Every property that I purchased, the security deposit have just transferred over to myself, and my transferred over because that is the tenant's, and then that is refundable. But I have heard of some instances where the seller or the buyer has, well, the seller has been able to negotiate the security deposits to be kept by themselves. But in that scenario, you still would have to fund those security deposits. So let's say it's $100,000 worth of security deposits, and the seller says that, oh, well, I just want to keep all those, then that's going to come out of your pocket to still fund that because those belong to the tenant. So that's, I would check on that second part, but I have heard that before. But generally just expect for it to just transfer over to you as the buyer. So let me see. All right. So another question is underwrite conservatively. What does that mean? And when I mean underwrite conservatively, just take into consideration the worst case scenario. So in the simple fact that let's say you're in somewhere that's not as landlord friendly and it's a very lengthy eviction process, then those need to be factored into your numbers as well. And then also that if you're walking through you're looking at the condition of the interior of the property, and also you want to check the exterior as well. But just if the furnace looks a little bit older and maybe it has about 2 to 3 years, just go ahead and put in your numbers that you're going to replace that, because further down the line it's going to come out of your pocket versus saying, well, I'm still going to end up paying this, paying what the current purchase price is, and then ultimately that you're going to be in trouble a little bit later because you didn't put that furnace or maybe other mechanicals into your expenses. So all that's just going to affect your bottom line. So always, that's what I mean by just underwrite conservatively. And for me, I have someone in-house that does the underwriting, specifically my partner. Huge shout out to Jacob Blizzackett. Well, his last name Blackett, but he does the underwriting for our deals, and he does a lot of stress testing. So if you can do the stress test and you're still fine, then that's good. And stress test means, okay, well, in the worst case scenario that shit hits the fan, that I'll still be able to cover my mortgage. So that's one thing by what I mean by stress testing. And that's a whole different element. So right here, what's the best way to transition a tenant from paying the previous landlord to yourself? Who delivers the news? How was it delivered? All right, and that is Bay Albiz. I think I pronounced that over on YouTube. And through that is the best reason to transition is it can go either way. I actually just sold a single family home, and single family investment property I own, because I'm selling all those single families because I'm now transitioning to multifamily. And through that process, I mailed the tenants that were occupying that property that, hey, I know this management company is no longer managing it, which is my management company, and that, hey, moving forward, all of your payments need to be paid to this property management company. And then generally that company or that owner will reach out to that tenant, given a brief introduction on themselves. So just to cover your bases, I would say just mail a letter to the tenant from paying the previous landlord to yourself. So I know that may have been backwards. So for you as the buyer, you can, once, let's say August 1st is when that tenant starts paying you, ensure that you have that tenant's contact information and you reach out to them and say that, hey, I am the new owner starting August 1st. And let's say this is the middle of July, that, hey, I currently now own this specific property. Moving forward, you will make rent payments to myself. And then also what you can do to the seller is have them also call or mail a letter just to also provide that confirmation because on the tenants end, they're like, who the heck are you? Is the person who just bought it, and they could think it's a scam. So always get that confirmation and get the seller to mention to the tenant that, hey, this property is now sold. You'll be making payments to the buyer now. So all right. So hopefully that brought you some context on that. What was the first big lesson, good or bad, that you learned in self-managing? That is from John Newbold over on Facebook. I would say the biggest one is there is tons of moving parts. And by moving parts, there is, so when I purchased my first single family home resident for an investment property, this was, I think it was like 6 or 7 years ago. And through that, I was managing the contractors. I did the leasing. Oh gosh, coordinated the closing process, and then also I did tenant relations. So I was answering I was answering the phone calls when a tenant did need a repair. And again, those of you on Facebook, please do not forget to like, and also everyone who's on, share and love and wow as well. And I know I just got sidetracked, but I would say it's just a lot of moving parts from that, because I did a lot of the managing, again, from the tenant relations, the managing the contractors, to doing the leasing, and then also the coordinating the closing process on the specific asset. So there's just a lot of moving parts with that. And I would say up front, it's good to learn, and I was also full time in it. But through that, I was able to learn a lot. But looking back, for someone who does not have the time, I would just recommend delegating that until you're at least at scale, and then you can start the self-managing yourself. All right. And then anyone where do you personally look for multifamily deals, such as banks, auctions, driving by, cold calling, etc.? Thanks, Jared. And so what specifically I do is just cold calling. So I will pull the specific criteria in any given market. So let's say in Indianapolis, Indiana, pull all of the apartment complexes that are between 75 and 150 units. And then through that, all information is public record. So then you can find the owner of that specific asset, and majority of the time it's an LLC, but you can actually Google that LLC oftentimes to find out who the owner of that LLC is, or maybe you can find the attorney who filed that LLC, and then that's when you call the attorney or you call the owner directly, and then that's when you start the pitch. Hey, Sterling here. I purchase apartments just like yours for 30% over market value for cash in less than 60 days. So, and then that's when you determine if they're interested in selling. A lot of times you may get not interested, and then that's when you start the follow-up process. And some of these, when you're working on the larger deals, it takes quite a bit of time to build that rapport, and also it's longer cycles generally, so 6 months to a year to where you could see it close. So great question on that, J Rock. I mean, there's other methods. You can coordinate with brokers as well, but right now brokers are the cream of the crop. Everyone's going to brokers to find deals. And once a property hits the market, it generally gets bid up. You're seeing multiple calls to offers. So if you can beat those brokers to the deal, then you're golden. All right. So let me see. You have, what's your niche? Gwen, you have 135 units. What's your niche? I have just a little over 300 units, and niche is mom and pop owners. So through that, the specific rents could be anywhere between about $125 to $175 under rented. So we go in there, do a complete value add, which is doing renovations to the interior, to the exterior, which could be new signage, resurfacing the parking lot, doing new flooring in the interiors, two-tone paint scheme, all the good stuff. And then that's our niche. And we're in I believe you call it tertiary, but we're in those markets that have a larger MSA, so Indianapolis and Indiana, and then in Cincinnati and Columbus and Ohio, and then in Kentucky, Louisville and Lexington. So I like to see those larger populations, and diverse economy, population growth, as well as job growth. So those are factors you want to look at when you're purchasing property, but that's a whole nother discussion in itself. Antonio Herrera asks, I'm having problem with lenders when I reach out to them. They ask for experience. So that on your end, Antonio, you have a basically on your end a problem to solve, which is experience. So in that case, you have to find someone with experience and partner with them. You may, if you have a deal that you're specifying or you're speaking about, you want a loan on, then in that case, then you may have to give up some of the deal. So I hope that answers your question. And Shara, no, I do not purchase 30% over market value. That's not a pitch. That was just something I was just throwing out there as far as a big claim to get the owner's attention, but I don't say 30% over market value because I do not pay 30% over market value. But that's just a little example of when you're cold calling someone, you have to have a hook to grab their attention. Oh, that was call me out on that one. And again, for everyone who's on here, please share. And I'll be picking someone to win the book on managing rental properties, and then also have a phone call with myself. Woo! All right. Are 1.5 units good to buy? Christine, if you could elaborate on that. One and a half units good to buy. I don't know. Yeah, if you could elaborate on that. I don't know if you're kidding or not. All right, let me see. How do you verify income for month to month cash paying tenant? In that case, you would just ask for the 30-day time period of recent pay stubs. And if they're a 1099 and they don't have a job, then you would just ask for bank statements. And this is, and again, Jerome Jackson, thanks for joining the stream. And he says, how do you verify income for month to month cash paying tenants? So one, I wouldn't accept cash. And verify income. Yeah. So in that case, how do you verify for month to month cash paying tenants? Is one, once you do purchase that property, transition them to not paying cash, and then also you on your end would want to get those pay stubs that I mentioned in addition to those. If they're 1099, then you would want to get those bank statements. But then if you're specifying to due diligence from the owner, you would want to get their bank statements showcasing the deposits into their specific bank account. So again, if that tenant is cash paying and their rent is $1,100 per month, then you would want to see in that seller's bank statements that, okay, well, the 7th of each and every month, this tenant is, you can see a deposit into their account of $1,100. Cash is always difficult to track, but that's one way. And again, the worst case scenario, as I mentioned earlier, is you'll just have to offset your risk is just to purchase cheap enough, the property cheaper, and then in addition to that, you'll just have to underwrite the deal conservatively and just assume that maybe the tenant's not paying at all. So there's some interesting things that goes on when you're dealing with some mom and pop owners. Just purchased my first single family residence. What's the best way to get a tenant? Gwen, great job for making the leap of purchasing that single family home for purchasing that as a investment purposes. You have overcome that barrier. Most people do not get over the hurdle. So phenomenal job to you. Applause. So the best way to get a tenant is this will really depend on your market, but I'd say majority of your demographic will be online searching for homes for rent. So it's best to just leverage Zillow.com, Trulia.com, Hotpads.com. Craigslist may work in your market. I'm not sure where you're at, but I would say usually those main three are good. And then there's other sources as well, but those are the main three where renters go for to look for homes, which is Zillow, Hotpads, and Trulia. There's many. I think Street Easy is another one, but those main ones you'll be able to get a pretty good amount of traction. depending on where your specific property is located. So that's one thing. And because if it's in a great location, you will not have an issue finding a tenant. And great schooling. So how long does one have to wait to get a loan from the bank to buy a rental property after buying a single family home? That is a Debbie. I have not specifically ran into that, so I will not be the best to be able to provide value on that. However, I don't see any reason or any specific time frame that you have to wait after buying a single family home to live in, I think is what it is, to going out and buying a rental property for investment purposes. All right. So he says, I found a 21 unit that is making 153K price around Well, Antonio, I would say you mentioned that the bank turned you down from the experience part. If you're hungry enough for the deal, you just got to solve that problem. Find someone who provides the experience. It depends on how bad you want it. That's what it comes down to. Not trying to do some motivation, but for my first deal, for those of you who don't know a little bit about my story, is first single family home residence I bought I didn't have any credit, didn't have any cash. I actually owed cash. My bank account was negative because I withdrew to do I forgot what it was specifically, but I had negative balance in the bank. And through that I didn't let those basically be a hurdle or a barrier for me to purchase that single family home residence. I found someone who had all of those credentials, and what they didn't have was the time to find the deal. So that was what I brought to the table, and that's how I solved my problems, and I solved that person's problem. So for you, Antonio, yours is the experience problem. I guarantee there's someone out there who is looking for a deal, but on their end, they just don't have the time, and they just need to find a deal to deploy their capital, and they have the experience. So that's a problem that you're solving, and they're solving your problem. So that's what it comes down to. All right. Do you reinvest the majority of your earnings into paying off the mortgage? I would say on our end, we have a specific, interest payment that we have. So we have, I don't want to get all into the terms of the specific loan terms that we have, but whatever that interest rate payment is, that's what we pay each and every month. We don't take additional cash flow and try and pay the mortgage off as soon as possible. So that's just our philosophy. Plus we have investors, so on that we have to provide them a specific return, and if we're dumping more, you don't get as much money. I would say cash flow is key, and then just dumping that cash flow to pay the mortgage down just doesn't make too much sense for me from an investment standpoint. So that's just me personally. If I inherit a tenant on a month-to-month basis, can I require them to sign a new year lease? I would say you have to. If your new year lease has the same terms as that specific one that they previously had, then you can do that. But one thing I mentioned earlier, and it is based upon market again, is tenants' rights do transfer to you. So if your new lease is, if they're renting, let's say $1,100 rent and your new lease is $1,200, then you're just not able to just jump in there and say just change all those terms, because that's something that's against tenants' rights, essentially is what it comes down to. But again, Alex, you just have to coordinate with an attorney on that. I know in this market you can sign a new lease, but the lease will just have to have the same terms. Again, our studio style apartment, good purchase near Metro Station? I would say no in that case, because you have to, maybe now there is, that goes into your market, but I would say purchasing a studio, not very many, your renter demographic is very small. Not too many families are wanting to move into a studio apartment. So I would say just go at least minimally I would say 3 bedroom or 2 to 3 bedroom. That way you get a family, because families are more often going to stay in there for the long haul versus a studio. You may get someone who, if it's in the metro area, that it could be maybe a millennial, for instance, that just stays in there for a year and then just relocates jobs, or you just have a small renter demographic. So that's your risk. Would you suggest building new in this market if you're having a hard time finding a deal, or wait for the drop? That is quite the dilemma, and a great point, Jared. Building is, we've looked into building specifically, but now with the rising costs on construction, the land is going up in price too. We just stick with the existing apartments, and I would say on your end, you just have to dig more deeper on, or build a bigger funnel, or a bigger top line, a bigger pipeline on existing deals on the top. That way you can funnel it down to find more. Because just to give an example, we're probably looking at anywhere between 100 to 125 properties, or properties, in order to find one to buy. So that could be the same thing that you run into. You just have to be very diligent. When you go into new construction, it's a lot more riskier and a lot more unknown. So if you're new to it, if you can partner with someone who experienced to offset that risk, then that's good. But that's just one thing to take into consideration. Thanks, I'll work on it. All right. So I think there's probably some additional ones that are all through here. But again, for everyone, I do hope this did bring you some value. And if you happen to have any other questions, if you're on BiggerPockets.com, don't hesitate to reach out to me, slide into the DM, ask me any questions. I'm here ultimately to bring the most value. I'm here to help. And yeah, you enjoy the rest of your Sunday. And those of you who, if you happen to have any additional questions, don't hesitate to comment below and at me. If you're on Facebook, I'll jump in there and answer those questions. And then also, please share, because I see some shares that are right there. I may have to refresh this, because I'm going to pick someone to win the book on managing rental properties by Brandon Turner, and then also have a phone call with myself. So again, thanks everyone for joining. I'll see you next Sunday. Have a great one.